Okay, so how are you? How is your how is your day going? Um, do you remember the first day you started trading? Um, I remember it like it's mine. I remember it like it's yesterday. The first day I put on a trade, I was trading synthetic indices, and I didn't know anything. And looking back to what I knew then and what I know now, okay, I can just say it's crazy. I wonder where I got all the confidence to do that, right? The confidence to do what I was doing, because I didn't know anything, but I hopped into trading and I started pushing buttons. You know, we always get this impulse of doing something, always of doing something, right? So here today I'm going to share with you a simple concept. Okay, I'm going to try to open your eyes, to wake you up to something, so that you won't hate yourself, right? In this trading method, you're going to learn how to not hold on to a position too long until you get stopped out without any profits. You're going to learn where the market is going and why it is going there. You're going to learn something simple, okay? So now look at this right there, where I'm pointing with this arrow. That move started from right there, right? Started from right there. So this concept, I will call it the self-devouring snake, right? I'm sure you have seen that image of a snake that is devouring itself. That's what the market is doing most of the time, right? So when this market here started going lower, I'm sure somebody started selling there on that candlestick. When that candlestick started, they started selling and selling. Maybe somebody sold under that candlestick, and then maybe somebody sold on that candlestick, maybe somebody sold on that candlestick. So as this move is going lower, there are people here that are selling this, that are making money. They're in profits, right? As this move from year to year, as it is moving from there are people that are partially selling along the way. They are partially selling, right? Because the market is going down. So now, what does that mean? That means we know that there are people that are going to be greedy, and they are going to be still, somebody who sold here might still be holding, right? And the market is efficient, right? So which means there are equal numbers of sellers and an equal number of buyers. So if you're looking at the market, and I want you to look at the market this way. You're looking at who is in profit right now, and how can I take money from them? Because the market is taking money from someone and giving it to other people, right? So we know that there are people that are going to sell somewhere around the beginning of this move, and some of them, they're going to be greedy, and they're going to hold for a very, very long time. So how do I know that? Because I've done that, right? How do I know that? Because I've done that. So now let's come back here, right? We are going to wait. We don't join this move most of the time. We just let it run, and then when it gets here, right, you see right there, this candlestick, the next opening candlestick is an up close candlestick, and it took out the high of these candlesticks. That represents a shift in the market structure, right? It's a shift in the market structure, right? The moment this candlestick starts closing above this candlestick, we are about to look for a reversal right there. Why are we looking for a reversal right there? Because we get a shift of market structure. So now, what are we looking for? We're going to start looking for these people's stop losses. Maybe some of them moved their stop loss to break even. Maybe some of them don't even use a stop loss because they are scared of getting stopped out, right? Because if you're going to join a move like this, you know that logically it's not logical for you to hold it for so long. So most of the time they're not going to use the stop loss, or sometimes they're going to trail their stop loss too close. So now what you should be thinking when you are seeing this candlestick is, okay, now I've gotten an opportunity to take money from someone. Who are you going to be taking money from? From these people that sold from here to here, right? So this is going to make you confident into holding trades while you are in them. As long as you know whom you are taking money from, you don't have to feel scared, because you have a narrative on why you are pressing a button, right? So right here, the market just changed the market structure, and if you look at it from here, right, we changed the market structure from this candlestick. We changed market structure from this candlestick, right? And then the market started retracing up. Where is it going up there? It's taking all the money from the people that were selling from this one, right? And then it starts moving up until it gets to the 50%. If you need these settings for this Fibonacci, I posted them on the channel. They're already available, and you can also join my WhatsApp channel if you need more. I will be very happy to assist you there, right? So now here you can see that when it got to the 50%, that's where most of the time it retraces. So you can take it the 50% because it's where most of the time you can enter right after the shift of market structure of that candlestick would be here, and you put your stop loss under there, and then you target that. You can get out there if you are content with that. But if you want to hold, and maybe you have a bullish bias on the higher time frame, more like the daily, the weekly, the monthly, right? You are that type of trader who likes holding. You can hold. Why are you holding? Because you know that there's someone who sold right there, and they got almost very little drawdown. Because if you sell on a breakout on that candlestick, you're going to get very little drawdown. When you see this type of candlestick, you shouldn't be thinking I should be buying, right? You should be thinking I'm going to sell on this breakout right there. That's another entry method for another day. Okay, so now this market starts going up, and with the benefits of hindsight, right, of the benefits of that the market is already printing the candlesticks. Now we know that it went higher. So what I'm trying to tell you right here is that I'm trying to give you reasons for you to hold on to a trade for a longer time. Why should you hold on a trade? I'm trying to give you a narrative, right, on why you should hold on a trade, or why the market should go to where it should be going, right? The market doesn't go in one direction. It goes up and then it goes down. It goes up and then it goes down. What will it be doing there? It will be taking money from buyers, giving it to sellers, taking money from sellers, giving it to buyers. As it is going from here to there, it's taking money from these people that are still holding from right here to right there, right? And then from here to there, it's taking money from them. And then after that, what does it do? It goes back down. And now here, right there, when that candlestick, you have a shift of market structure right there, right? And then there we get another shift of market structure that represents that the market has started taking these people's money, right? All these people that got in from here, if they are still holding from here, then that means we are going to be going down, taking them all out till we reach this low. After reaching this low, then right there, we're not sure where the market is going to go, right, most of the time, but it's wise to keep on just selling, following the higher time frame trend. Don't try to pick tops and bottoms on the lower time frames. That a higher time frame bias, right? So the concept that I'm trying to show you right here, that this thing, it doesn't go in a straight line, right? If you started right there on that candlestick, it's going to go down. As it is going down, there are people that are selling, and they're in profit. They're making money until we have a break of market structure to the upside, right? If we get a break of market structure to the upside, then that's where we start looking for a shift of market structure. That's when we start looking for buys, right? For that, the market is going to start going higher and higher and higher. And when it starts from there, right, when it starts from here, so now here we know that the shift of market structure right there, we're going to start on taking on the stop losses of these sellers that are still holding from here, because I know most of people won't exit, or they'll just trail their stop losses, right? So now here they're going to go and take them all out and take them all out and take them all out. That's what it's doing, right? It's just going around, giving people money and then taking it back, giving people money and taking it back, because it's an efficient market. So it allows buyers to buy and allows all the sellers to sell, right? It doesn't go in a straight line. I hope you understood that concept, and I thought it was very important for me to share this with you. And I'll catch you on the next video. Probably I'll be giving you entry techniques.